Hello, welcome to another video. It's Nomadic Trader here from Phoenix Trading Academy. Weekly recap and projections into the following week. And I've actually made some notes this time. So it's the first time that I've made notes to try and stay on track because I've just been sort of doing it off the cuff. I'll have a quick look at the charts and then I'll just roll straight into making the video. And what I end up doing is I just keep forgetting things as well that I've actually announced in the video. So what I wanted to do this time is to stick to a bit of a script. So what I'm going to do is I'm actually going to break the markets down. So S&P 500, starting from the weekly, the monthly, the weekly, then the daily. But what I wanted to do is I just wanted to break the market down using multi-time frame analysis as I currently see it. Then once I've done that and I've added that context, what I will do is I will go over last week's trading in a little bit more detail, and then I'll have a look at talking you through some identifying some opportunities for the coming week. So without further ado, before this video, last week's video, we were actually trading up here. So we've actually had a bit of a turn of events. So I've marked out this bullish order block here and we're actually traded above there, but you can see what's happened here. So at the time of recording, this is Sunday, the 28th of August. And next Wednesday is in fact the end of the month, which is the 31st of August. So we could in fact continue to trade down lower, or we could actually just change the candle formation here. So we've got a few days trading next week. Or this week as the time that you're watching this video. So that is something to consider. So this might just end in a doji, so we're not too sure. It's not to say that price is going to come straight down, but what I'd like to draw your attention to is if we create the dealing range high to low, we've actually rejected the 50%. We've traded higher, we've taken this old high here, and now we're actually coming back down again. So how far could we come down before the next monthly PD array? What I would do is I'll use this parallel channel to do a 50% mark, and then I will just draw that in. So that's there. I'll label that as monthly bullish order block mean threshold, and then I'll delete the channel. And then I'm also going to delete this as well. So on the monthly time frame, we've got this dealing range here. We're actually back down into a discount. We've got a swing high here, and we've got a swing low here. And this now could be a potential swing high forming. And I mean, this is actually potentially to add another swing high here. This is actually quite a lot of price action. So we don't need to be fooling ourselves that price is just going to absolutely drop through the floor, because in one of my previous videos I did actually highlight the principle that a run is a trend and a trend is a run. So a run on a monthly time frame is actually a trend on the daily time frame. So if you imagine this is actually 20 trading days, that's going to look something like different to just a single run, a single candle like that. So we've got this mapped out. It's Bank Holiday Monday at the time that this is aired in the UK. So that's something to consider for lower volatility and liquidity in the market. And that actually just summarizes what I'm seeing on the monthly. So I'll add that again. There we go. So we're actually back now into a discount. And this actually looks like it's taken this liquidity on the monthly and the weekly time frame, and then it's coming back lower. So switching gears a little bit there from previous videos. So go down to the weekly time frame. We've actually taken this buy side liquidity. We've confirmed the pullback here on the weekly time frame with a 1, 2, 3 swing high. So what that means is we've actually gone higher, taken the buy side liquidity. We've traded lower below the low of the previous weekly candle. So I'll highlight that as previous weekly low, and then moving forward into next week, I'll also put one on here, but I'll leave that off for the purpose of the video. So on the weekly time frame, we have this dealing range here. So we've actually broken this short-term high, we've broken this short-term high, and now we're trading lower. So at the moment on the weekly time frame, we are still in a confirmed pullback. So what we need to do is we need to identify where we're pulling back to. So we've got this fair value gap here, which we've actually just reached the mean threshold. So if I do the 50% of that, so a little note for your journal, or if you're taking notes at all with these videos, the 3 areas of influence on a fair value gap, bullish or bearish, is the upper boundary, the lower boundary, and then the mean threshold, which is the 50% mark here. So we've actually got that there, and we've actually traded into that. And then when we go down to the daily time frame, you'll see that that was actually a full closure of the daily fair value gap. And ICT did actually share that with us last week. So I'm just going to delete these. So we've got the 50% mark. We've actually got this monthly bullish order block mean threshold, which is actually down within this region. So if we go down to the weekly time frame, or before we do, sorry, go down to the daily time frame, it's worth noting that we are currently approaching the 50% mark within this premium and discount dealing range on the weekly time frame. So we're actually still in short territory to come back down lower into lower PDRAs. And what we need to be considering and taking from this multi-time analysis into the trading week next week is the weekly expansion. So we've actually had a long range weekly candle, and then we will have this mapped out here with previous weekly low, and we'll be expecting a continuation. So what we could do is Monday, Tuesday, is we could go off the momentum here, trade down into this lower PD array here on Monday and Tuesday, and then have some form of a retracement here. So create a bit of a low test week, come back up and then reject it, maybe get a bit of an indecision. So depending on how the weekly candle opens and how price action begins to trade on the 1 hour and the 4 hour time frame will give us a clearer indication on what we want to do. So I'll delete that for now. So we've got this confirmed swing high. We've taken the buy side liquidity. We know that the momentum on the weekly time frame is currently to the downside. So in your notes, you want to be just making a note that the weekly expansion is going to be bearish. We've also got the lower boundary of this fair value gap here on the weekly time frame. And then below that, we've actually got this bullish order block as well. So if I go down to the daily time frame, you can see here that we've actually got this gap here, which was the it's actually the close, sorry, it was the low from last week. And if you recall in my earlier videos, we'd actually come back down and we were showing some signs of deceleration within the daily candle formations. And then I was flip-flopping around a little bit here, and I did actually do a midweek update to say that I'd actually been caught out twice trying to buy the bottom here, because I'd identified that this was actually still holding price, and I wanted price to actually come down into this region here before I'd considered going long, or at least see some form of a follow through here with confirmation to take a short or like a small quick trade to the upside. And what I was actually anticipating was because we've actually broken this swing low here, we've had that follow through. The confirmation was the momentum on the daily was still coming down because we hadn't actually seen a swing low form. So there was no confirmation that this wanted to turn to the upside. There was only the anticipation due to the deceleration at this key level. When we'd actually taken the south side liquidity here, this then was really looking promising to take some longs back up. Now, for the institutional order flow to change from bullish, higher highs and down candles being protected, higher highs, high lows, all the way up to this significant area, it was actually fully confirmed when we broke this low and then we came back up and created this swing high here. So at the moment we've actually got a high, a lower high, but we don't have a lower high on this side here to fully confirm this as a swing high, even though we've fully broken this. Now, this right hand or right side lower high to form this swing high on the daily could be all the way down here, and it doesn't have to come back up to this at all. But I'd actually got this slightly different. Now, the key level that was actually being respected was this back here. However, I'd actually seen when we'd rejected this level, we'd taken the sell side liquidity here on the daily time frame. We'd actually reversed from this level. The drawn liquidity for me was actually this gap, which was the weekly open gap, which was just like that there. So I was expecting price to come up to 4220, and the higher that candle came in at 4217.25, so just shy. And I did actually project in our WhatsApp group. We've got a private WhatsApp group that I was expecting price to follow through here and to reach the gap here, the weekly open gap, to fill in this and then come lower to the fair value gap on the weekly time frame. So drawn liquidity up to here, create that lower high for full confirmation of a shifting trend, and then a trade lower. So we did actually see that. Now, in hindsight, expecting this gap to come and get filled in again would have actually brought us above the weekly open. So this was the open price here. It would have taken us like into or above the weekly open price. And I think there is significance there to say that if this wants lower prices, it's not going to come back up, because this level will be protected due to the side of the market that the institutional order flow is on. So we've taken that level there, and the reason why it actually got this level here was, if you go down to the 4-hour time frame, let me just turn these session breaks off a second. There you go. Was this dealing range here? So this 50% mark here, we've got this 4-hour fair value gap to the downside and then this gap above. So I'd expected us to come back up into a premium here and then to tap this area and then just drop basically and then head to that low. And where we did actually end up trading to was the lower boundary on that fair value gap, on the daily time frame. So that's ever so slightly different, just there. And we actually hit it to the pip. So the low on that candle was 4042 3/4. The high on that one was 4042 3/4. So like absolutely ridiculous precision. So those were some of the key levels. So once we've actually got a break of here, so if I just clear all of this, and the way that I get my DDP, which is the daily directional prediction, is taking into consideration whether we're expanding or contracting, acceleration or deceleration. The swing lows, I'm looking at trading between the swing points because that gives you a nice clear objective with momentum on your side. I also trade with the weekly expansion on my side as well. And once we've actually got this low broken here and we've traded lower, what we're expecting or anticipating then on the daily time frame is each of the daily lows to be taken, which we saw all the way down until this candle, and then we traded higher. And then we've traded back up into that premium PDRA and then we've come crashing down. So the downtrend is now confirmed with a market structure shift as well as a market structure break, because we've got two swing lows that have been broken on the daily time frame. There's your market structure shift, and that's your market structure break. So this was the first area of I think it's distribution. So I'm only recently starting to back test the market maker buy and market maker sell models. And basically you start off with a form of consolidation. You run higher into a higher time frame PD array, i.e. resistance, and then you come back lower to take that area there. So we have actually completed this leg here, and we've taken all of this liquidity. So if I do a quick summary from top down, starting on your monthly time frame, where are we in the current monthly dealing range? We are back to a discount. We're going to be trading within this mean threshold of the monthly order block here. So I'll have that in mind. On the weekly time frame, we've got this dealing range. So I'm going to delete the monthly dealing range now. We've got this weekly dealing range. We've actually got the closure of this weekly fair value gap, which puts us back into a discount. Then if we wanted to trade lower below there, we've actually got this, but I do prefer it on the daily time frame. So we've got this low. So this low is the low of this weekly candle, will actually puts us on this here. So so this one is the highest point for the order block, and you've also got this rejection block as well. So that's definitely a key area. I'll be anticipating prices to continue lower until we see lower objectives. We've got this one here, but we've also got this daily fair value gap here. So I'll be looking into the beginning of next week, or at least with the overall narrative on the downside, I'll be looking at trading price action down to this here. So I see this is the draw on liquidity, because we've taken the buy side liquidity here. We've met this objective here, which we've rejected, and then we've come back down. We've completely filled this in here. So we can anticipate some form of a retracement into this, which would then give us this as a dealing range within the weekly. So this would be 1 hour. So if price starts to move up in the daily time frame, the 1 hour and the 15-minute time frame can actually start to create higher highs and higher lows within this structure here, which would actually put us into this bearish order block, back into the premium of this dealing range, and then we could potentially see lower prices here. And what I wanted to do is actually check the economic calendar with you as well, which is something that I have been forgetting. So if I go to next week, refresh that. So Monday, 2:15, we've actually got FOMC member Brainard speaking. I don't know too much about that, but what I can tell you is all that volatility that we saw on Friday was from the FOMC itself. The highest is going to be consumer confidence. That's a really big driver in the market. So 10 a.m. EST on Tuesday could be a really big driver for price. But I will be looking at the market at this time of day to see where we are, current price structure. And if a bearish opportunity presents itself, then I will be looking at taking that short. And we've got quite a lot of news actually, Tuesday, Wednesday, Thursday and Friday. And on Friday, of course, we've got non-farm payrolls. So I won't be trading past Wednesday. So Monday to today, in the time that you're listening and watching this video, is going to be a bank holiday on Monday. So I'm going to anticipate that being lower liquidity. Tuesday is probably the safest bet, with sort of looking at closing out or taking short like quick in and out positions on Wednesday, the latest. And then we've got some really big fireworks there. Huge week for macroeconomical news. So I've given you a breakdown from top-down analysis, monthly, weekly, and daily. I've also gone into the key areas that we were looking at and anticipating with dealing ranges, swing highs, daily directional prediction. I've not gone into anything in super detail because of the just out of anticipation for it being a long video. But we can actually see here, we had a short-term shift to the upside, and this area here where it's respected it beautifully. So that is looking left, that old high. And we've actually created this. This was it was just shy of an OTE. So when you draw in that as a dealing range, we've had a shift in structure, broken this key level, and then we've come back down to retest it. So it's textbook, it was beautiful. However, it's just what I really struggled with last week is just getting in sync with it, because I was losing money down here, buying too early, and then when I'd actually got this level on here and we tapped it, because I'd already been stung twice, I was expecting prices to actually come and do a deeper tap into this level and then maybe take this low here, which we didn't actually see until the big run higher. So a very poor week in terms of trading performance, even though I'd actually called it accurately at the beginning of the week when the markets were closed, and then also midweek as well. So quite frustrating, but at the end of the day, there's going to be more opportunities, so I'm not going to beat myself up too much. So that takes me to the end of the video. What I'd like to add as well is I've been really busy lately, and I've been trying to put together some content to do a proper presentation in feature topic videos. I'm pondering with the idea of doing it in a presentation format using theory and slides and stuff. But I think, to be honest, just out of the interest of keeping you guys engaged, and also the time and effort factor for me, because I am still working full time. I still do have other commitments. And what I've actually identified is I'm spending less time focusing on actively trading than I am considering making these videos. And although I do really enjoy putting these videos out, and I enjoy the community that's building up now, we're almost at 1,000 followers. So thank you very much for being engaged. I don't just want my involvement with trading just about being a YouTube channel. I am a trader, and I'm a trader before I'm a YouTube content creator. So I just wanted to say really that I am working tirelessly in the background, and I'm back testing the MMXM, so the market maker buy and sell model, where to be found, how to identify them, how to trade them in and out, money risk management and everything else, and how that actually sits in the higher time frame order flow. Because for me, that's where I think my strength lies, with navigating the overall narrative of the market, where it's going and what it's doing and why it's doing it. I think that's where I've had the most of my success so far. But I'm also been back testing some other things, and what I want to put together is the ultimate guide to daily bias. There's a lot of people out there that are doing similar things, and they're doing very short feature topics, which are basically just straight copy of what ICT does. And that's not criticism, it's just an observation that I don't want to sit amongst the crowd. I don't want to be doing what everybody else is doing. I don't want to just regurgitate what ICT's doing just to sort of get clicks and likes. Although, unfortunately, there's going to be an essence of clickbait there, because the man's going viral, and I want to piggyback off that success, which he has actually given permission for, and also the use of his logo. But I want to actually introduce my experience to these content videos, and also I want to be able to show experience in bringing those concepts to life, rather than what everybody else seems to do is explaining already like what an order block is. And all you've got to do is you just got to go to Michael's channel, type in order block, and you just watch a video and it's there. So I don't personally see the value in doing that. There will be definitely essences to that, but the way that I will be bringing that into my content is how to use that concept to actually make money, rather than just rehashing content for the sake of rehashing content. Well, anyway, I hope that's been insightful. A little bit of a rant there, but I did want to just cover that off. So what I'll do is I'm also looking at keeping up to date with the community tab on my channel for midweek updates, and also, providing that I get the opportunity on a Wednesday, I'm going to redo my analysis with just a quick recap and an insight into where we are currently for that midweek, to because it is a long time. There's a lot of things that happen, a lot of things that don't happen between these weekly videos. And although I think they're really, really useful for people to be able to build on their market structure and narrative and bias, and also like the market flow, which is generally what I focus on, a lot can happen in that time, and we have to be reactive. So if we see something that violates the initial outlook, we need to switch gears really quickly and to get on board with what's currently happening. And obviously you guys don't get the benefit of me actually switching gears. So I'm going to try and keep you up to date with that. And please keep an eye on the channel. If you haven't already, please like the video if you found it interesting, if you've got anything from it, but also subscribe to the channel and also share it within your trading community, because that's how we get the name out there. Okay, well, thanks for listening, and I'll speak to you soon.